All right, guys, let me know if you can hear me all right. You guys should be able to hear me. I'm just getting my drink ready real quick. Boy, do I need a whiskey. All right, let's go ahead and get into it. I suppose I could leave the music running in the background and just make it low. Is the music too loud? Shouldn't be that loud, but I'll lower it just a little bit. There we go. Hopefully I don't get a copyright infringement. All right, guys. It is not a beers and Bitcoin night. It is a whiskey and Bitcoin night. Go ahead and turn this off. How we doing, guys? Long time no see. Man, there has been so much that has been going on. Most of you guys that follow me have been keeping up with Twitter and all of that. For those of you guys that haven't, man, it was just a disaster. My mom had to have surgery because of ulcers that she had in her stomach. That ended up the surgery ended up not going so hot, and she was in ICU for 2 weeks. At the same time that was happening, my wife ended up getting an infection from her previous gallbladder removal surgery. So she was in the hospital for a week as well. And it was just, man, it was a lot. There was a lot. That was a lot to take, man. Still trying to get my head right from all of that. It was just extremely stressful. Plus, I just found out that I'm fighting the Virginia Department of Motor Vehicles right now. Apparently what happened is even though I moved, Virginia screwed up. And even though I transferred the title and re-registered the car in another state and all of that stuff, Virginia was still charging me property tax, which I didn't know about because they never mailed it to me because my address obviously changed. So they revoked my license in Virginia, which means that my license is also revoked here. And in order for me to get it back, I had to basically go through and hire a fucking lawyer and shell out $3,000. And I'm going to have to fly back and forth to Virginia, and it's going to be a fucking disaster. It's even more money. Because over the weekend, the Labor Day weekend, I didn't spend that celebrating. I basically spent that with my parents and stuff since my mom got out of the hospital. But she's doing well now. She's doing better, which is good, obviously. My wife is already back at work. She's already recovered and everything. I'm just mentally trying to recover from all of this. It's a lot. So at the end of the day, though, it's really good to be back with you guys. Just have a whiskey with you guys, talk about the markets and such, kind of hang out for a little bit. I'm still going to get back to doing these, every week and everything. It's the big part for me is mostly just getting my head right. And, that was all very depressing, stuff and everything that hit me emotionally. That hit me pretty hard. Normally I don't get emotional over stuff, but, yeah, it's been a lot to deal with. So, yeah, I guess that's about it. I also know that obviously during these last, sorry, I hit the microphone. Obviously over these last, 2-3 weeks or whatever, while this has been going on, I've been posting very, very little, if any. Haven't traded at all. Haven't looked at charts basically at all. Except for in the last 2 days since I got back. I only got back this week on Tuesday. And it was Tuesday afternoon, and then Tuesday night and Wednesday I was unpacking, doing laundry, getting groceries, dropping my daughter off at school, doing all these fucking things. Just kind of getting back to normal, some sense of normal. So there is going to be stuff to talk about. I'm pretty much just going to bring up a naked chart of like what I posted earlier today. So I'm going to take a look at Bitcoin first and go over prior price action. So let's start with that first, and then we'll go ahead and get into some other stuff. Let's take a look at the daily chart. Okay, so we had obviously this humongous breakdown or whatever. This in here was like when I stopped trading, and then this happened. So I imagine that if the algo, I haven't even looked at what the algo has been doing, but I imagine that if it wasn't short through the majority of this, then it might have gotten wrecked on like a long or two trying to snipe the bottom of this. So that probably did not work out. It probably lost a couple sizable trades on that. Through here, it probably was mostly break even. I don't know if it caught this, but literally, what is this? This is like a giant middle finger pattern. like what is happening here? Fuck you. Big fuck you pattern by Bitcoin. But I mean, all of these levels are still holding true to right now. Like I haven't adjusted these at all. And it's pretty much still been, bouncing off of this main area of support, hovering right around like the 25K-ish area. So just really flat, except for this fuckery here. If you guys know what was going on with this, like what caused this huge move to the top, like this big fuck you situation here. If you guys have any clarity on like fundamentally, like what may have caused that, let me know. Maybe there was like a news event or something. I'm not going to go scrolling back through like past news and stuff. It's just not worth it. I'm sure that there was some kind of fundamental news event of why this occurred. Who knows? Maybe it was another one of the many, we're filing for another ETF or whatever. So who knows? But yeah, I mean, that's pretty much what's going on with this week. Oh man, this weekly chart looks bad, but it is holding this level here. Man, this is either Jesus. It's like, which way, Western man? Like that's a very, very critical level of support apparently on this daily chart, is right at 25K. I feel like on the weekly, it's not bad if we close below 25K, but if we don't regain it like immediately, then it's probably not gonna end up being too great. Like we'd have to regain this in like one candle, you know what I mean? Like something like this was like a false breakout, right? We had like one candle break above this really important level, and then immediately the next candle closed below, and that was confirmation of the reversal. So like this for me is like, okay, if we close below 25K, cool, it could go that way, but like in the next week or whatever, like this closed in a day. So like if in the next day we close below 25, if next week we close like back above 25 and do, we put in a candle like this or whatever to the top side, then, it would look something like that. You know what I mean? Still pretty much like that. My prediction is pretty much like sideways for the rest of the month. Because we're still going to have tons of volatility. I'm pretty sure the next FOMC event is on September 20th, I believe. I think it's the 20th is the next FOMC. Correct me if I'm wrong. Well, no, because I was going to say the 9th, but that's tomorrow. So yeah, no, it would. No, I don't think it would be the second week. It's probably the 20th. It's probably the 20th because it's always a Wednesday. Nick thinks that it was bond yields. That's very possible. I mean, I have been soaking up like crazy bond yields on my IRAs. Like for real, the past like year, I have not, for the past, not year, but for the past like probably 3 or 6 months or whatever, I have not really been trading crypto very much manually. I've mostly been sticking to like Forex and managing my IRA. And with my IRA, in terms of bonds and stuff, pretty much what I've been doing is just like hardcore flipping, like really nice coupon bonds that have really high yield that are like short term. So I'll go like 2 or 3 months out and then flip them again, and then flip them again, and then flip them again. With like a solid portion of my portfolio. I think I've been doing it because the bond yields are so high. I've been doing it in pretty large amounts, pretty much like 35 to 45% of my portfolio. I'll allocate to like one specific bond contract that has like a pretty close, you know, like a 60 or 90-day maturity with like a really high coupon. And I've just been flipping them and flipping them and flipping them and flipping them. I've been doing that with bonds for probably like the last year. It's made me significant money. That and just kind of like staying in, what is it called? I think it's called like the short term. It's like a Vanguard, or is it no, it's like a Charles Schwab, like, it's an ETF. It's like the inflation protection ETF or something like that, something along those lines. And I've been having that and just, you know, just kind of chilling in mostly just ETFs and bonds and stuff. I haven't really been like flipping too many like blue chips or whatever. I've pretty much just been holding like what I already had and just waiting for the markets to hopefully end up going higher. But in terms of like legacy markets, like if we really look at this is, man, that's really not what you want to see, right? Like ding, ding, there's your first two connecting points. Fake out, big fake out on the weekly. Like this whole thing would have been on the weekly as like, you know, maybe 3, 4 or 5 candles maybe for for this part right here, big fake out here, and then boom, another rejection, and we just made a lower high. Really large drop off in volume here too. But I mean, the volume going up through all this was not very significant to begin with, except for this little piece right here. But yeah, I've been watching this. I got clowned a lot for this massive like rising wedge here, but I mean, we re-entered the wedge, but we did also retest this important level at about 43.25 as support here, and we bounced. But it's rejecting off that upper trend line, and that's a pretty valid trend line. I mean, that's a solid 3 touches. So there's clearly other people that are looking at this level. There's clearly other people that have these trend lines here. So, you know, just something to keep an eye on, in my opinion, you know, for like the longer term and everything. But, you know, when you start looking at higher levels or whatever, this is pretty much the level that we would want to be looking at up here, right? You know, about the 4,700-ish. That would be about, I'm even going to put the ish in there because, yeah, that's basically the next really major support we have. That obviously, if that gets broken, you know, like full blown, you know, like bull run, we're going to, you know, see another, where's the tool for it? I think it's over here. Yeah, we'll, you know, like end up seeing like another one of these, you know what I mean? Like if this breaks out here, that it's funny because that would actually work out really well with the trend line, right? Like we end up breaking out or something. Do something like this. Like I could definitely see something like this happening, you know? This is definitely a possibility. Like this would be like the ultra bullish scenario, like going to all brand new highs. Like that would be the ultra bullish scenario. I honestly, I just don't see that happening right now. There's just not enough liquidity in normal tech stocks and just in stocks in general right now because bond yields are so fucking high, and they're going to keep going higher because, yeah, I mean, honestly, my opinion is I think that they hike again, even if it's a small amount. I think that they hike again, come the 20th for the FOMC. I mean, as consumers, we know that inflation hasn't been getting better. It's actually been getting worse. Like the rate of things going up has been slowing down, but things are still going up, you know, like year over year. Like it's really bad. And if you look at the quarterly stuff, I know that they usually adjust it and they're like, oh, well, compared to last month, it's like, dude, last month is only 30 days ago. Like you're talking about 4 candles on the chart. Like, it doesn't fucking matter. I mean, some of these charts that measure some of these bigger trends and stuff that are going on, like in the economy and stuff, some of them you can't even look at a monthly chart. Some of them you can only look at a 3-month, like a quarterly chart. So it's really ridiculous, and it's just like a headline thing. It's for the Biden administration to be like, look at how good we're doing. We decreased inflation by 0.03% month over month. And it's like, wow, okay, but quarter over quarter, it's still up like 2% or 1.5%. And year over year, it's fucking like still like what, 6% or 6.5% or 7% or something year over year still. That's really bad. Like, clearly inflation overall is not fucking slowing down. I don't really care what anybody says. Things are the most expensive that I have ever seen them ever. It's crazy. It is insane. And if it's not, and there's another thing, another trend that's going on called shrinkflation, which is another, it's not a real coined term, but I understand the principle of it. It's like more people are starting to wake up. I was waking up to this like 3 years ago, was when I started noticing that they were charging the same price for the same product, but putting less in the bag, or making the patties on the burgers smaller, or giving you a smaller portion, or, cutting corners on, you know what I mean? I started noticing that already. And now it's like, now a lot of people are really starting to wake up to this, and they're like, holy shit, like, I just bought this bag of chips, and this bag of chips is like 40% more than it cost like 3 months ago. And there's half as much in the bag. And they've dubbed the term coinflation for that. And I think that that's pretty cool. And that's another thing that's really happening. But it's not really a separate term. It's just they've coined the term shrinkflation. And it's something that, the people that really aren't in like finance or understand financial markets and economics, it's a way for them to understand like what's happening. And this has been happening for a while. Normally when the consumers that don't understand these kinds of things start waking up to that, that's how you know like it's really bad. Like when the average Joe that doesn't know shit about anything is posting stuff on Instagram and TikTok and YouTube about like, oh my God, like how the fuck is this so expensive and I'm getting so little of it? Like, look how little was in this bag. Look at this picture that I took from a year ago of how much I got versus now. And like people like that, like people that don't know nothing about nothing are starting to realize this. That's how you know that it's getting really bad. And I honestly don't think that it's over. I think that it's still going to continue to get worse. Is that to say that this whole pump in the stock market has been folly and it's just a fake pump? No, of course not. I mean, we came off of our lows at, damn near 3,500 and we pumped all the way up to fucking 4,500 in a year. It went up 1,000 points in a year. That's a lot. Do I think that this sustains and we like really, really move to like all new time highs like I just showed you with that extrapolation here? Do I really think that this happens? I mean, I personally don't think that happens right now or within the near future, but I mean, it is a possibility, yes. I'm more thinking along the lines that what's going to end up happening, and I posted this chart on Twitter, I'll just go over it real quickly, is I think a more likely scenario is we're going to see some kind of structure like this. Obviously not as significant as this, right? Like our COVID crash was only 35%, compared to the dot-com bubble was 50%. Housing market was almost 60%. What were these back here? Bretton Woods, the Nixon shock, that was 50%. This one was smaller. This one was 37%. That was the Vietnam War. But, occasionally we get these, expanding diagonals and just a real stagflation of the economy for a very, very extended amount of time. I mean, like, look at the timeline on here. This is a weekly chart. Look how long it was before we finally broke and retested these highs, right? We first hit these highs here in 1969. We hit them again in 1973. So that's already 4 years. And then it took us another, what is this? 80? So like another 6 or 7 years or whatever to tap the high again. And then it still didn't break through, and it didn't break through until, like 3 years later in January, right at the beginning of 83, it broke and then retested the lows the next year in 84. I think that seeing something like this, as depressing as it sounds, I think that this is like a real reality for us. unless something really drastic changes with the economy. Now, that one lasted for a really long time. This one between 2000 and then when we finally broke the highs here was in 2013. So this one was 13 years, but this one was like way longer than that. What was this? 68, 78, 88. Damn. So like 16 years. Yeah, this one was definitely longer. But yeah, I think that we end up seeing something like this. But I think it's going to be smaller and it's going to end up happening faster because like we've already had that first move to the downside. I think honestly what happens is we see something happen like this where we kind of try to deviate above and then we do one of these. Like this would be worst case scenario, like slipping into like a very, very large depression. Like that would be like, people would be calling this a depression, even though it's really not. People would be calling this a depression. It's like retesting pre-COVID highs. And that's still not even that low, right? I mean, that's still well above 3,000. But that would satisfy the pattern, right? It would satisfy this pattern. That's what it would satisfy. And the fact that we made a lower low, which is what happened here. And that also happened back here as well, where we got a lower low. So I think that this is a real possibility, and we pull some kind of M shape here and see just a really long period of like stagflation and stuff. You know, like, am I going to bet the farm on this and start shorting the fuck out of the highs? No, probably not. But I mean, this is definitely a real scenario that I'm definitely going to be watching very closely. I'm going to be watching the signals very closely. I'm going to be watching what the Fed is doing very closely. We're going into an election year. That's going to have a, you know, like the fact that it's also an election year is also going to play a factor in this. And with this kind of situation here, where we just had a massive move to the downside and then a massive move to the top side and almost recovered all the way going into an election year, I've personally, when I've been trading markets, I've personally never experienced something like this before, this dramatic. So I don't really know what's going to happen with this. You know, so yeah, it's gonna be rough here. It's definitely gonna be rough. So yeah, this is gonna be a hard one to predict. I mean, like I want this to be bullish really, really bad, but with the way that the economy is going right now, the Fed continuing to hike rates, the housing market and the commercial real estate market looking like it is, the absolutely out of control spending and inflation that this administration is doing, election year. I mean, there's a lot that's going into this right now. So this is going to be very difficult to predict, but obviously this is your key level here, right? Like on the weekly chart, this is where you want to be watching, is like 47.80. You make a weekly close above that, that's either like mortgage the house and go long, or, you know, like fucking hedge. If you're already long, like hedge the fuck out of your position, then like start hedging. They think that raising rates is going to work like last time, but it is not working. No, it's not working because they printed too much fucking money. Between 2000 and I think it was 22, which was only just like last year, they printed something like $9 trillion. So, I mean, you know, that's what caused this. And then the market started flipping over and they started pumping, you know, they started printing more money back in here in 2022. And that's what's causing this. And hiking rates isn't going to do shit for that. It's not doing anything. Everybody already bought their houses. Everybody is already locked into like as low as fucking possible mortgage rates. Like if you're not a boomer or Generation X and you bought a house within the last like 4 years, since 2020, you basically locked in the best fucking thing, the best rate that you'll ever have. So like, if we go look at some of these, right? Let's look at these bond yields. Yeah, look at this shit. 3 months, 5.5, 6 months, 5.5. I mean, like, look at these numbers, 5.5, 5. The 2 year is breaking 5. That's huge. It hasn't broken that since fucking 2007. Yeah, I think bond yields are going to continue to go up. I think they're just going to continue to go up. And we're going to start seeing a slow expansion of the economy. And then you've got this situation on the 10-year right now where it's like begging to break this trend line here. If that happens, this, you know, it's already closed above here once or twice now. So this could easily continue. And the economy is just too strong. People have too much money in credit. Well, see, here's the thing. People have already used their credit. Hence this chart. This is the United States debt balance on credit cards. It is only viewable on 3-month and above. This is done quarterly. This just updated. Okay. You know, at the beginning of the year, and now it's here and it's over $1 trillion. That's kind of crazy. The bankruptcy rate is starting to go up. It's gone up by, what was this? 12.748. Now it's at 15.724. That's a pretty significant. What percentage is that? A pretty high percentage. 23%. Bankruptcies have increased 23% since just April. That's huge. That's huge. Bankruptcies are already starting to pile up. And yeah, credit card balance. This is just credit cards. Like that's only credit cards. That's not like mortgage loans, student loans, auto loans. That's none of that. That's just credit card, like retail cards, like your Target card, your Macy's card, your Best Buy card, your fucking, you know, Discover, American Express, your random Visas and shit like that. It's not anything else. It's just credit cards. Which is really depressing. I mean, I remember trading back in 2019 and seeing this and being like, holy fuck, it's almost $1 trillion. And seeing this like massive reversal and being like, oh, okay, thank God people are getting like swept out of the market. And that was 2020. That was 2020. But I mean, this is going to be an even larger correction, I think. But we'll see. This is another chart that I've been looking at. This is another one that's only updated once a quarter. And again, I made a Twitter post on this that I went over this in some detail, but you can see that this is the delinquency rates on mortgages, right? So this is like, okay, people that are like 90 days plus late on their mortgages, right? This looks to me like that's getting very smooth brained down here. This tells me that this is probably going to start reversing. People are going to start claiming bankruptcy, which is it's already happened. I've already started seeing like posts on Twitter and social media and stuff like that of like people going bankrupt and fucking houses and cars getting repossessed and shit. Like it's already starting to happen, and it's going to happen first most drastically to the people that were way living beyond their means. But you can see that this delinquency rate on homes and residential mortgages is starting to flatten out here. That means that it's probably going to start looking up. Dude, it's been so illiquid that you can really put a layer of longs under your short position and rapidly place and cancel them. Yes, you can do that. Oh, 10-year futures? Yeah. Giga hype about rates being high. Feels like it's too late. Oh, feels as if it's late to the party, and this is where retail piles in and makes the wrong decision. Yeah, that's what I'm saying. That's why I'm kind of predicting like a double top here. Like on the indices and stuff. Like it's just too good to be true. There's too many people piling in. The economy is so fucked right now. Like when I see 90-day delinquencies flattening out and starting to move up, and I see the credit card balances at fucking over $1 trillion, and I start looking at these things and I see bankruptcies going up 23% since the beginning of the year. And I didn't even mention the unemployment rate. You know how they've been harping on, oh yeah, look at, we've got the best economy in the world. Everybody is working right now. Yeah, he was saying that when we were down here at like 3.5% at the, July last year or whatever. Yeah, since our low at like 3.5, it's ticked up. Okay, it's ticked up. From 3.5, we've gone up 8%. The unemployment has shot up 8%. And this is something no one's talking about. I know it's a numbers game, and they're like, oh, well, 3.8 isn't really that much higher than 3.5. if you math, it is. It's over 8%. So, and this is going to keep going up too. Absolutely. I think that I'm not comfortable until like we start, we have like a steady unemployment rate, like over 4%. I mean, and if you look at this chart, that's pretty fucking normal. Okay. Like this is extremely low. These bottoms here were the lowest that it's been since back here in 1969. Okay. So this is like extremely low. Like usually it's always above, like about 4% or so. Like right here, that was the lowest that it got. It was like basically right around 4%, 3.9. What is this? 3 or 4. Okay. So like this is 100% unusual. And if there's that many people unemployed, why the fuck is there over $1 trillion of credit card debt? Why are delinquencies going up? Why are bankruptcies going up? If supposedly everybody is working, why are they late on their mortgages, racking up credit card debt, and late on fucking payments and shit? Doesn't make sense, right? Well, that's where the uncorrelation is. So if you followed that that little post or tweet or whatever that I did on Twitter, you're probably already thinking about that. Yeah, they think that they have money and credit, but none of them are figuring the actual, they're not figuring in like the actual like national economy and, the administration decisions that are taking place right now with the Secretary of Treasury and Janet Yellen. They're not taking into consideration what Jerome, I was about to say Colin Powell. Tell me you're old without telling me you're old. I was about to say Colin Powell. They're not taking into account, for the younger viewers out there, you guys probably don't even know who Colin Powell is. That's before your time. That was back in like the Clinton days, and like the Bush days and stuff. Anyway, they're not taking into account what Jerome Powell is doing. They're not taking into account what the status is of our national economy. They're not looking at the global economy at all. They're just in their own little bubble, eating their fucking froyo and getting their fucking Starbucks every day. And what are they doing? They're not paying for it with their cash. No. They're using their cash to go buy fucking things that they can't really afford long term, like expensive cars, expensive houses, living beyond their means, doing all this shit, going out to fucking eat all the time, blowing their money on fucking OnlyFans, okay, and fucking skins for their Counter-Strike guns, just stupid shit. They're just blowing money. So there are other shit that they actually need to buy, like food, their rent, their utilities, their fucking insurance for their car or whatever. What are they doing? How are they paying for all that stuff? They've been swiping it on credit cards. It's not real money. It's like they think that they have credit, but in doing, it's like it's like a big illusion. Like it's not real. It's not real money. And all of that contributes to like the nation's debt. And it's really, really bad. It's getting bad. This is the highest that the federal funds rate has been. Oh, actually, look, I think we broke our previous high here, just barely, by like a quarter. No, not even a quarter of a percentage, by like 0.1%, basically. We've broken our previous high. So this is the highest that the Fed funds rate has been since 2007, and it has literally had zero effect. So, yeah, push it higher, guys. You know what I'm saying? Like, I'd feel comfortable with it back up at like 7.25. You know what I mean? Back like 90s. You know what I mean? In those 90s, that, those late 80s, early 90s zone, like 6.5, 6.25. I think that we need it. It would be enough of a shock to the economy where we would start to see us going into a deflationary cycle. Unemployment would go up. The delinquencies and the mortgages, delinquencies and the bankruptcies and stuff would continue to rise, right? The economy is going to end up stagnating. Home prices are going to come down, so the people that are stuck into their houses are going to end up bidding each other down to offload their real estate, which is great for people like me that have been waiting patiently throughout all of this to buy a house, because I don't really give a shit if my mortgage rate on the house is 7%. If I can afford it, like, I'm good with my money. I know that I can afford a 7% interest rate on a 30-year fixed mortgage. I don't give a fuck. because I know that in the next 5 or 7 years, when we're done with our deflationary cycle and they start cutting rates to stimulate the economy again, in 5 or 7 years, I'm going to be able to just fucking, they'll be right back down to 3-4%. I cut my mortgage rate in half. I do a cash refi, pay off the principal on the pay off the equity on the loan. And now my home goes up in value. My payment on my house goes down and I owe even less on my mortgage because I paid off a huge amount of the equity of the house. So that's kind of the way that I'm playing this. That's not like financial advice or whatever. I've been waiting for about where we're getting to now for since about 2021. And we're almost there. We're like a year or two away. So this is like my long-term plan. Like I'm not planning on buying a house until probably late 2024, like when all of this shit really starts jumping off. But that's pretty much my plan, is like, okay, I'll take the house at 7.5%. For me, the higher the rate, the better. I don't give a shit, because the higher it is now, the bigger my refinance is going to be 5 or 7 years on down the road, which means the more money that I'm going to be able to pay off on the equity of that house, which means the lower that my mortgage is, and the more money that I have when we have our next fucking crisis and the economy shits the bed the next time, in another 10 or 15 years. So that's the way that I'm going to play it. That's what my parents did. They were very successful with that. They just simply have no idea what the economy is actually going to do. Everything costs more. Compounding is the eighth wonder of the world. That is correct. Inflation also compounds. See, now I like that you mentioned that, because that is 100% true. And that is something that not very many people have been paying attention to right now. Man, look at these 10-year yields. Look at this shit. 2007 prices. That's bonkers. Just can't believe those charts, man. It's so crazy. Like that was the V-shaped reversal. Like if there's anything that's like, oh, what does a V-shaped reversal look like in your opinion? That's a V-shaped reversal right there. I mean, it doesn't get much more clear than that. And like now we're stagnating or whatever a little bit here. But like, damn, that's so insane. It's natural gas doing. It's the summertime, so this is low. I've been paying attention to this. I'm still in nat gas from I think it was like 280 or something. No, not 280. It was like 228 or something. It was somewhere down here. I bought down here in this support area somewhere. I'm still in that trade. I've been holding it for a while. That trade did really well. US oil. See, this was another really important trend line. See, this is why these high time frame charts are awesome, guys. That's what I'm telling you. Overall trends in the market, you got to be looking at those weekly charts. They're so important. It's like, oh, the time frame doesn't matter. But if you want to make the big money, these are like the big plays to be making. Like down here, this was like max opportunity. Like risking it for the biscuit and playing the lose it if it's lose this and it's lights out level. That was the risk it for the biscuit level. And I'm still holding oil ETFs that are priced. I didn't obviously snag like the exact bottom. I'm not going to sit here and, fucking blow smoke up your ass and be like, yeah, I nailed the exact bottom at 63.50. No, I fucking didn't. I got it like 65.20 or something, like somewhere up here, like 60. Actually, no, I don't even think I got that. I got it somewhere in, it was one of these wicks. It was like 68 and a quarter or 68.50 or something was like my average buy-in, because I took like 10 grand of my IRA and bought fucking oil ETFs with it. And sure enough, I wish I would have got this, but I was too much of a pussy. I didn't want to throw that much of my IRA in ETFs at that point. So I waited until I had like confirmation of like, okay, like this, once this broke, I'll zoom in here. This was the week here. I'm pretty sure like this was the confirmation. But this was where I had bought, was this bullish fucking hammer right here. And I bought this low or whatever it was, somewhere around here. And I averaged in and I got like 68 and 3/4, 68.50, whatever. This candle closed the bullish hammer and I was like, okay, cool. I'm going to hold on to it. And then this happened and it broke these previous highs from the beginning of fucking June. And I was like, okay, cool. We broke June highs. Let's see what happens. Then we broke the fucking These were the June highs here. Then it actually broke these June highs back here. I was like, oh, holy shit. And it just kept going and going and going. And I'm sitting here a happy man. And now we just broke out of these highs too, which is fucking awesome. This was giving me the heebie-jeebies though. This level right here, when I got this nasty candle, I was like, man, I was about to get faked out so hard. When I saw this, I was like, fuck, because this was like right before all the shit started going down. And honestly, I'm really glad that I had all that drama and shit going down with like my family and the lawyers and the Virginia thing and all of that stuff. I'm really glad that I had all that going down because I wasn't trading or looking at charts. And like, I'm looking at this now and I'm like, oh, thank God I would have gotten smoked on that. Like I'm so glad I didn't get faked out. I would have been so pissed at myself for selling this bottom at 80 when I could have held to, back up to like $100 again. This is only my second oil trade, I think, in the last 5 years. The last trade that I took on oil was I bought ETFs. I don't know if you guys remember the day. Those of you that have been in the markets for a long time, remember when this bullshit happened? Okay. Remember this red candle all the way down to 0 and in some cases negative. I risked it for the biscuit on this day when this happened. I was sitting at my computer. I hadn't even moved out of Virginia yet. I was sitting on my computer and I was watching this happen. I immediately got on my phone and I bought 5,000 shares of an ETF. And I think my average cost was something like $2.69. And I did not sell it until it hit $100. And I held it through all of this until it hit $100. Obviously, I didn't sell the top. 100 was my number. I wanted 100, and it hit 100 back here. And I sold it just before the spike, and then I kicked myself, and I was like, oh, damn, that sucks. Luckily, it double topped, and then it reversed, and I was like, oh, man, I made the right decision. I'll buy it back later. I was waiting for this to hit. I didn't catch the bottom, but I got damn close, and now I'm going to try and ride it to 100 again. That by itself has added so much money into my retirement accounts and my IRA that I'm going to be able to borrow against when I'm ready to buy a house. Like those single-handedly, these two trades, just these that I've made, forget the bonds, just those two trades that I've made has banked me enough money for at least a 20% down payment on like, a $350,000 house already. So I'd like a 30 or 40% down payment on like a $450,000 house. And I'm very close. I'm very close. Very, very close to being able to do that. But anyway, yeah, those are like long-term things for me. Did the Fang finally flip over? No, it's battling here. We'll bring this down to a daily. Look, it rejected off this same level again. Isn't that crazy, guys? Look at that, to the tick. You just saw me move this over here to the tick. It rejected at the exact same level, 79.12, right from these fucking highs over here. That is insane. This looks like I don't want to call it a Head and Shoulders, but it's got like smoke trails of a Head and Shoulders, right? I don't know. Damn, down would be like here. I don't know. Do we think tech is going to crash that hard? If you guys don't know what the Fang index is, you guys should go look it up. This is way more reliable, in my opinion, than just staring at the US 30. This thing is just a clusterfuck here, but sometimes the patterns end up working. Oh, wow, you guys are really chatting it up in here. Hold on, let me read all these. Simply no idea how the economy is going to compounding. However, keep in mind that markets run out of supply fast because we have derivatives markets insane fluctuation. Yes, that's true. Derivatives markets just blow everything out of the water. $1 in 1930 is like 7 cents now. Yes, that's true. No, it's not that nobody understands it. Just nobody fucking cares. And that's exactly why with these new generations, they're so dumb. They're so uneducated. They're so fucking retarded. They don't even know what's between their legs, and they're keeping them dumb and lazy and uneducated and locked down in their houses and fucking working from home. There's no manliness. There's no man jobs. There's no fucking masculinity anymore. There's none of these fucking things. And all of those things contribute, believe it or not, to the fact that they want to completely digitize the US dollar into a CBDC for exactly that reason, because they already have the majority of the population, the young population, exactly where they want them. Fat, dumb, lazy, and uneducated. That's where they've got them exactly where they want them right now. They don't want anybody to know. They don't want nobody looking up history and learning economics. They don't want nobody learning how to read charts and trade the markets. That's for the rich people and the politicians. That's not for the peasants. You know what I mean? Anyone can feel however they want. BRICS nations have been selling the dollar. Bond yields continue to climb at such an absurd rate that will literally force people to buy them. Well, I mean, what's going to end up happening though soon is I think eventually these end up getting blown out. Okay, the Fed is going to hike again, right? Like, okay, we're probably just seeing the effects of like the last 25 basis point hike. This is probably going to keep climbing up. They hike again. We probably stagnate here for a little bit and then maybe come up to like 4.5, 4 3/4 or something like that, like right in here. That's what I really think is going to end up happening. But honestly, like at that point, I think that's when the economy ends up like starting to break. And that's when like the Fed pauses for like maybe 2 meetings or 3 meetings, you know what I mean? For like a quarter or two. And then they start saying, you know what? I think it had a good effect now. So we're going to start cutting rates. And that's when, when they announce that, the economy is going to go fucking nutso. It's going to be a goddamn free for all. We're going to see another crazy like exponential move like to the top side. Like it's going to happen. Like when you look at the SPX, like that would be the bullish invalidation of this rising wedge. That would be something like this happening where it's like, oh no, wah. And we just like rocket up to like 5,000 and beyond. And it's just like, that's the new norm. Like the stock market at 5,000 and beyond. Like the next time that we see some major crash, breaking down through 5,000 would be like, oh my God. Like when we broke down through, 4,000 back here during this crash, it was like, oh my God, we've lost 4,000. It's hell on earth. Everything is going to zero. You know what I mean? Like the mass, like when we bounced off of this, it was like, okay, it's cool. When this major support failed and this happened, and then we bullish, especially when we bearishly rejected here, that was like this massive panic sell. And like, that was the time to buy when everyone was screaming, the world is going to end, everything's going to zero. That was the max opportune buy. And I mean, all you had to do is like, jack up your chart to a daily or a weekly. A weekly would be even better. Oh, damn, that's not on the, let's put this one on the weekly. If I could show you. Right, so you've got this really important level. Well, look, all you had to do is crank your chart up to a daily or a weekly and look left. Oh no, look, it was another previous known historical area of consolidation on the weekly chart. So clearly this was like ladder, try to, DCA. Like this was like the max opportunity buying cost. And obviously if you did that, even if it was just ETFs or indices funds or whatever, currently you're up like 20% spot, and that's not even like if you decide to do fucking options or whatever. So let's see here. Anyway, this will basically force feed liquidity back into the USD and is basically the only answer to the problem that the US has. Yeah, pretty much. I mean, if we take a look at the actual dollar itself, I mean, that's a funky looking chart, man. Right back up to 105. I remember making posts on fucking Twitter. I'm not going to dig them up now. I mean, I kind of want to, but I'm not going to do it. But I remember posting, okay, we're probably going to see a 105 retest. Sure enough, it's exactly what happened. We got like a fucking fake out here. And yeah, I don't know. I mean, we kind of call this a wedge. I don't know. I mean, do we want to modify what we actually call this thing and just call it a wedge at this point? At the end of the day, I really don't want to, because I was watching this for so long. But, I know that you guys remember, like I was looking at this Adam and Eve for a very long time. And I was like, oh, okay. Yeah. Okay. And then this started happening and I was like, oh, okay, well, it's going to end up being like a cup and handle and then we're going to go. That didn't happen either. We got a 1, 2, 3 correction. And, you know, like this really nice, like you can see that this is 5 waves. 1, 2, you know, wait. This would be 1, 2, 3, 4, 5. That's a correction for a B wave. And then, yeah, like an impulse C. So that's, yeah. And now we're just climbing to the top side. 2, 3, 4. This looks like a 5. We might be topping out here. That's a nasty candle close that we just had. Is this the daily chart? Oof, man. Damn. That fucking dragonfly. Or is that a hanging man? Whatever. It's a fucking doji. The only solution the government has is bond yields. Tech takes money. When US bond yields more than tech's, a once in a lifetime bond tech inverse will happen. It's the only solution. Yeah, I know. And I'm really thinking, yeah, bonds and tech can't both climb at the same time forever. One is, I'm also betting that tech crashes. Actually, it doesn't even have to be tech that crashes. Just one sector needs to break. And if it's not tech, it's real estate. And I'm not talking about like retail, like consumer real estate. I'm talking like corporate real estate. And that, I think that would be like the biggest domino, like the first big domino to fall. And that would cause tech to crash. Because the tech companies still have all their fucking people working from home. And they're just paying for all these fucking buildings that they don't want to pay for. So yeah, that would be immense. Or it would happen actually, I don't know. It might happen either way, vice versa, whichever one happens first. If tech crashes, that might cause the consumer real estate or the commercial real estate market to crash as well. I don't think bond yields break either. Yeah, I don't think bond yields break. There's no way. I don't think they break. There's way too much money in them, and it's like stupid to not be putting your money into bonds. It's like the easiest play right now. All you have to do is sit there and wait. Like you just put it in there and you forget about it for like a year, 2 years, and you're making tons of money on it. So, I mean, yeah, come on, really? The 1 year yield, 1 year is at fucking 5.5%. The 3 month yield. I mean, and this is what I've been doing. I've been playing 3 month yields for like literally a year. I mean, like, look at this. Look at this. The money that I have been making off of these years, and I've been compounding all of it throughout all of this. It's like, oh, okay, I made this much in 3 months. Oh, okay, cool. And I take the whole amount and roll it over again. And then take the whole amount and roll it over again. Take the whole amount and roll it over again. I've done it like 4 times in the last year. Actually, no. 3, 6, 9, 12. I think this is my 6th cycle. So it's been about a year and a half that I've been doing that. Just compounding bond yield. Like, it's like, well, what are you trading? It's like, well, I'm kind of not. I'm just kind of waiting. I'm just kind of waiting, like, hey, how long, like basically, like you're going to do it until it doesn't work, right? Like, yeah, it's a risk-free value. Yeah, bond yields won't break. Risk-free value. This is the very definition of Sharpe ratios based off of bonds. Yeah. I mean, and every single time that it looks like it's leveling out like this, like it just keeps going higher. It's so hilarious. Like every time it looks like it's leveling out, it goes higher. It's like, oh no, look, oh no, yeah, we're leveling out. Oh, we move higher. Oh no, we're leveling out. Oh, we move higher. Oh no, it's leveling out. Oh no, we moved higher. Oh, well, it's going flat. It's leveling out. Oh man, what are we going to do? What are we going to do? What are we going to do? And it's just going to keep going higher. This is going to move up more. I mean, yeah, if they're hiking, obviously, like it's going to keep going up. This is easily all of these rates, in my opinion, as like even the 2-year, 10-year, 20-year. The 2-year definitely breaks 5%. I think that the 10-year breaks 4.5%. And I think that the 20-year gets closer to 5%. And these 3 and 6 month and 1 years, they easily go to like 5.5%, 6%, or 6%, 6.5%, no problem. No, I believe, I really think this is the only time that bonds have actually, well, I mean, I guess you could call this parabolic back here. 2018. Remember when we had that crash in 2018? This was parabolic, but it wasn't like this long of a move. It was like, how long was this? 2017? It was only 1 year. I mean, this has been going on for 3 years now. It's just been crazy easy money. It's crazy. Insane in the membrane. Anyway, guys, just real quickly, I know that the algo, I did take a look at it before the stream. No, it hasn't been doing so hot. This week, well, not this week because it's Friday. Next week, I'm going to be setting meetings with the devs and everything because I really want to get the ETH version fixed up and everything. Obviously the ETH version, I was already about to be releasing, to be honest with you. I'm kind of glad I didn't because it would have basically been making close to the same mistakes. It made less mistakes than the Bitcoin one did, but it still would have made it still took some losses. So I'm glad that I didn't release that yet because now it gives me the opportunity to be like, oh, okay, like maybe this market environment is changing, right? Like obviously if stocks go down, Bitcoin goes down. So, there's that. Obviously, Bitcoin has been taking a shit because the dollar has been going up, right? Those are inversely correlated. So, now that seems to be the case, what I'm going to be doing, since it's such a short time frame trader, I am going to be going back and modifying that and updating the kind of settings and the risk management and stuff like that. I'm going to set a couple meetings with the dev team next week and the week after, and certainly before the end of the month. Not only will I have an update to the Bitcoin version, which is definitely going to come faster, that's my highest priority, but the ETH version will also end up getting released before the end of the month as well. I'm going to be doing another promotion with that, have no fear. But anyway, as always, let me switch to full screen here. As always, I really appreciate the love and support, guys. Thanks for bearing with me. I know that I kind of like ghosted everybody with everything that was going on. I apologize, but it's like, I'm sorry, but I'm not sorry. Family always comes first. And I just have a lot of stuff going on. Plus, recently, I just got my second book that I'm studying for. Yeah, my Security Plus book. Woohoo! Another 700 pages that I have to read, study, and memorize. Awesome. But anyway, it's going to be totally worth it. Like I said, I'm still going to be doing all the algos and like streaming once a week and charting every now and then and all of that stuff. But yeah, no, I'm really like, just I want to move into cybersecurity. Like I just really do. It's something that's really been interesting me. I've been practicing on Hack the Box. I've been learning some Python and JavaScript. I've been obviously studying these books as well. And, studying for, I can easily pass the A+ cert. It's just, I want to do it the right way and work through the book. And then do the Security Plus right behind it. And then just take all three of those at the same time and pass all three of them. So that's kind of what I'm doing. I can pass the A+ one, no problem. I've been building computers on my own since I've been 16. So troubleshooting hardware and software issues, very simple for me. I know all of the things. But yeah, no, I started playing around with like Python, JavaScript, and, like just more coding stuff and Hack the Box and things like that. And I've really started taking a liking to just cybersecurity and stuff like that. So I think I'm going to, pass these two and just go into like some really easy, like help desk kind of thing. Probably before the end of the month or by my wife's birthday at the end of October, whichever comes first. And then just kind of working that while I go ahead and get my CCNA and then start, looking at getting my Amazon AWS certs and things like that and start, maybe seeing if I can get a job working for IBM Watson, that does all their AI stuff and start going into cloud and cybersecurity. That's kind of like the end goal with that. But the projects that I do, charting, trading, streaming, my algos, my products, my services, none of that stuff's going anywhere. Like, I'm always going to keep up with that stuff. No matter how busy I am, I'm always going to have time for you guys to keep up and trade with the markets and do all of that good stuff. I always find time for that. I'll probably be posting on Twitter less, unless it's like charts and stuff, which is good because I lost a pretty significant chunk of my my following because I was like political posting a lot. Yeah, that's probably not the thing. I've had like a good like solid 2-3 week break from social media now. And now that I'm only just getting back into it, it's kind of like, yeah, okay, let's just focus on the charts and focus on the products that I make myself. Focus on that stuff, call it a day. So that's probably what I'm going to be doing. In general, posting less, but you know, the quality over quantity, I guess is what I'm trying to say there. But anyway, guys, until next time, cheers. I'm going to go ahead and finish this up, follow it up with a cigar here. Actually, I'll show you which one I got. Hold on. So I've been working through, slowly, obviously, a box of these. And they all come in individually wrapped tubes, aluminum tubes. These are pretty nice. Romeo and Julieta 1875 numero dos. And that's what they look like. They're pretty good. They're mild, they smoke good, they burn even. I like them. Anyway. So cheers to that, guys. I'm gonna go. Next week, obviously back to normal. I'll keep you guys obviously very closely updated with what's going on with the algos. I know that I've lost some subscribers because of that, but I'm going to be doing another promotion anyway. I think most of the people unsubscribed because their promotional period ended or whatever, or they took one loss and they fucking shit their pants or something because they had it on max leverage. Who knows? Don't really care. Just going to keep grinding as usual. So until next time, happy trading.